Good morning, everyone. Oh, fabulous! Thank you. So, as I was preparing for today, I was reminded. I met many of you in the coffee break just before we started, and as I was having these conversations, the mood and the sentiment that I picked up was akin to the opening lines of one of the best books written in English literature ever, and the book I'm referring to is A Tale of Two Cities. And if you remember the opening lines, and many of us have studied in school, some of us are young, so we remember it. So I'll repeat those lines to you. It said, "It was the best of times, it was the worst of times. It was the age of wisdom, it was the age of foolishness. We have everything before us, we have nothing in front of us. We are all going direct to heaven, we are all going the other way. In short, it is a great time to be here." And the author is actually referring to the French Revolution. And there were a set of people who were very excited about the future because they were part of the new regime. They could see immense opportunity. But for a set of people, they were extremely worried and paranoid about what this new future meant, because it meant disruption, it meant change. So when I think about the industry, in many ways, I see there's so much opportunity, so much demand. Demand is growing at an unprecedented rate. At the same time, I also see so much competition. It seems like everybody is, running into the same space, creating challenging environments. And so when Joao invited me to speak, I said, my biggest strength and passion is in telecoms, and let me share with you the lens of a digital infrastructure growth opportunity, challenge, and innovation that can take place from the lens of some of the biggest partners for the digital infrastructure players and market participants. Right? So maybe just a quick context. When you look at telecoms as an industry, and this is about 40 telcos in Asia Pacific, look at their growth over the last few quarters. As we recovered from the pandemic, the growth was good. The industry started to grow again. The growth was between 6 to 7% consistently year on year, quarter on quarter, every year. Over the last this particular quarter, for the first time, the revenue growth rate is now beginning to plateau. It is beginning to go down a bit. It's about 4%, and it is going down partly because of there was some initial benefit of roaming revenues all coming back, some good work by some telcos in adjusting tariffs that created that impetus. The other good thing you can see is the telcos have become a little smarter. They're all tightening their operations. Their EBITDA margins are beginning to improve. They're managing their operations a little bit more effectively. So I use them to say, so what is, if you are really talking to the CEOs or boardrooms of telecom companies, what are their biggest priorities today? What are they focusing on? What is driving their investments? What is driving the partnerships that they're looking at? Companies like you or investors from this room who are looking at participating with them. The biggest growth opportunity they realize now is the enterprise business. That's where they are underpenetrated. They believe they have a capability to serve them better, especially by integrating a variety of different technologies, including 5G coming into play. The second one is to grow the adjacent revenues. The core business is slowing down. There is price competition that is bringing down the pricing. So I need to grow beyond connectivity services, and we'll talk a bit more about that. The third is we've got to reduce our OPEX and CAPEX intensity. Over the years, they have built incredible inefficiencies in how they have gone about driving their business, and there's an opportunity to bring it down. This phrase, telco to techco, seems to be a very dominant phrase in the industry. Almost every telco CEO is saying, I want to become a techco. Techco is about monetizing its assets a lot more, creating new intellectual property. Frankly, it's extremely hard for a telco to do it. It is against their DNA, but there is an aspiration to do that. There are a few who are beginning to make some good inroads into that. There's also this emphasis on improving customer experience. We haven't made progress at all, unfortunately, in monetizing 5G in any real way. We don't see, it has translated effectively to a growth or improvement in margins for them. Right? And the other big trend is the consolidation. It is happening, in-country consolidation is happening. A lot has happened in the last 2-3 years. More is happening. We'll see more in Indonesia, we'll see more in Malaysia, we'll see more in almost every single market, because that's the only way they can get a better ROE. So I just put this chart and put all the telcos, about 40 of them, and said, hey, how do they compare in terms of growth? And is there some commonality amongst their growth trajectory, right? So the good news is that many of the guns on top are really growing because they are in emerging markets. And Bharti and Reliance in particular in India, what they have done is they have been very strong in taking a stance to say we will improve the ARPU, we will raise tariffs, and that has helped them improve their overall revenue growth year on year. We see a similar pattern happening in Indonesia. We see some level of sanity coming into price competition, so that the churn is reducing a bit, and you can see that in the results for XL, Axiata, as well as in Indosat, which is represented as IOH. The good news is many of them are growing, and this is not usual for telcos around the world. So that's the good news. Now, from an EBITDA standpoint, we talked briefly that the EBITDA margins are improving, and year-on-year change. You can see wherever a merger has happened, telcos are now figuring out that, hey, I can do a good quality merger, I can deliver results, operational efficiencies are coming in. So that's another good sign, right? I talked about non-connectivity, how people are investing in growing beyond connectivity services. This is digital services. Some of them are selling financial services, some are selling OTT services. Companies like Globe and Bharti Airtel have done extremely well in selling financial services and become leading players for financial payments in their respective countries. You have Taiwan Mobile, which is I think now the #2 mobile operator. They have almost 60% share coming in from non-connectivity. They are the largest e-commerce player in that country. So telcos are increasingly realizing, can I leverage my assets better? Can I leverage my customer relationships better to drive that kind of a growth? Today, non-connectivity is accounting for about 20% of their business. That business is growing at we can see that it's growing at about 14% year on year, as compared to their core business, which is not growing as much. Let's come to the other area where potentially there's a bigger impact for many data center companies, which is their investments in the enterprise business. You can see that on an average for telcos, enterprise business today accounts for about 20% of their revenue. Their aspiration for many of them is, can I take it to about 30%? Can I drive that? So they are investing and buying lots of companies with capabilities in cloud and data, analytics, etc., to strengthen those capabilities and participate in that. Let's move to another potential area of help and opportunity that they're looking at. So I said, let me plot, because fiber leasing and is an opportunity. So you can see that the broadband penetration, particularly fixed broadband penetration, in a market like Indonesia is still, relatively low. Wireless, we have seen time and again, is no real substitute to the fixed kind of quality and experience that a fixed broadband can offer. So you do have some opportunities in Indonesia and Thailand and Philippines where I think there is an opportunity for market participants to invest and support these companies to build out their infrastructure. Predominantly, once you get outside of Jakarta, I think, or similarly when you get outside of Manila, and similarly in other cities as well. Right? Now, let's look at the M&A activity. I borrowed this particular chart from Bain Capital. The key takeaway is, obviously, the cost of capital has gone up, and as a result, M&A activity has slowed down. But there are some good underlying few trends that we need to keep in mind. The number one trend is that in-country M&A activity is going up more than regional activity. That means within a country, consolidation is happening more rapidly. And so that's a trend that we think will continue. We'll see, because there is so much pressure for the telcos to improve their return on equity. The second one is infrastructure. That is another big area. You see a lot more activity. I think, just yesterday, I believe Ooredoo Group and, if I'm not mistaken, Etisalat announced that they'll be the largest tower company in Middle East as well. So we'll see more of that activity continuing to grow in the coming months. So in summary, when you look at the telcos, if we want to partner with them, if we want to serve them well, their biggest challenge is core revenue is not growing. I got to do something about differentiation. There's really little to differentiate between one telco to another, other than price. You walk into, yesterday I was walking through some of the retail stores which sell telecom connectivity, and if you see that, the only thing you see in all the stores, where all the varums, all they put up there is price, price, and price. There's nothing else. Right? So you can say, what are we communicating to the customers? That we only compete on price, we only differentiate on price. The other thing is, the challenge associated with capex growth. There's so much data demand, and I'll share some insights on that. How do I keep pace with the capex intensity when my revenues are not growing? So the single biggest challenge for a telecom CEO today is that his return on invested capital is significantly higher than his weighted cost of capital. Right? So can you do something to help them? Can you help them get better at utilizing their capital a lot more, or free up some of their capital so that they can invest better and get better returns? So on the other end, so this is about the telcos and what opportunity they kind of present to you. On the other end, when you look at the market and the potential market for digital infrastructure players, we are seeing some explosive growth in demand, so much opportunity, and with now AI coming into play, that demand is likely to even grow by a multitude of factors moving forward. Right? So if you look at some of the key drivers of demand, and Asia in particular, if you take India for example, the average mobile data consumption per user per month is about 24 GB. And estimates suggest that it's going to triple over the next few years. The same is likely to happen in Southeast Asia. So the demand is going to be continuously insane. How do you differentiate and play in that space is the key. So you have good double-digit growth in overall data center market. We have markets like Singapore where there's very little vacancy and there's spillover of that demand, going into markets like Johor, which has seen so much of investment, including Batam. We're just talking with, I think, How Capital. We see a lot of construction activity in India. India is, going to see some huge amounts of growth. Jakarta has seen a lot of investments. It is also seeing a high vacancy rate as a result. So how do we try to internalize the data? So one of the ways we could look at, I said, is let's look at the demand for cloud. Right? How much of enterprise demand for public cloud infrastructure is in the country, and where are we relatively in that penetration? We were saying, we started talking about public cloud and moved to public cloud way back in 2010. We are now in 2023. And if you look at public cloud as a percentage of IT expenditure, that means only for the infrastructure, I remove the software as a service, you can still see the penetration is still very, very small. Now we are talking between 3% to, at best, somebody like Singapore is 15%. So there is still a lot of runway left in it. We haven't seen the banks in any part of this region other than Singapore really use cloud effectively. So the demand is out there, waiting to be tapped, provided there is enough skill set to be able to migrate these workloads to the cloud in a secure manner and still meet the regulatory requirements in every single country. With so much competition, with so much investments that you guys are doing, how do you differentiate? How do companies do it? And if you look at the leaders, they differentiate based on scale, they differentiate based on being able to drive better capital efficiency, or improving their overall cost efficiency. I'm sure this is going to be a key conversation point. What is likely to be the impact of something like AI on the efficiency of a data center? I think I was just talking to Devashish. He said potentially 100% improvement in ROI is possible. I think he will debate that in the panel later today. So I think there's a huge amount of opportunity that AI could do to transform the play for many players moving forward. The final aspect about the digital infrastructure market is the space for towers. Right? And what we are seeing is currently tower cos are about 57% of it overall ownership. So that's likely to continue to grow over the next few years. So if you're looking at partnering with these big companies, then we see three big themes that you could help or support. Telcos still have a lot of capital locked in their physical assets. If you can help them unlock it, it will improve their ability to deploy the capital in the growth areas, be it in the digital transformation, be it in improving their capabilities to serve the enterprise markets. The second one is, can you help them still improve their core connectivity business, which is, can you help them expand their fiber connectivity in rural areas? Can you also look at their existing FTTH, and can you support them by unlocking that capital that is potentially stuck there? The third one is, if you're a tower company, then beyond just providing that infrastructure, can you support them better with battery or power supply as a service, or potentially even looking at active RAN sharing? So that's what I wanted to share. I hope I've set the stage with some data and insights and provocation, and I'm sure you will have a great rest of the day with the conversations. So thank you very much, and I'll hand it back to the organizer.